The S&P has hit the golden ratio, and you can see that the strength we had headed into the golden ratio is slowly starting to fade away. That doesn't mean it's going to happen right away, but you will see that you're slowly starting to see sellers creep into the market. In today's video, we're going to zoom out and take a look at what this means for the S&P 500. What are the key levels we're looking at, and how do those compare to the Qs and the Dow Jones? Let's start first with the S&P. The S&P, if we were to take our swing high to swing low, has now hit the golden ratio, which we had near the 740.20 level. We've now surpassed that 749.53, and you can see with the last three candles, we're starting to see a little bit of weakness hit the markets. However, this weakness isn't strong weakness, and it still feels like there's buyers hanging around. So I wouldn't be surprised to see us break slightly above and maybe hit 750 or so before we see some sort of a correction. Now, what does that word correction actually mean in this case? Well, corrections can be all sorts of sizes. The smallest correction I would expect to see here is at least to the 1272 at 716.50. That's not a steep correction, that simply takes us back to about April's activity slightly above it. But that is the very first key easy level that I think you could use as a magnet. Now, if we were to see a slightly deeper correction with Fibonacci levels, the next ones, rather the next two to pay attention to, are the 100% retracement and then you have the 50%. The 100% is really just a fancy way to say your previous resistance that you cleared above, which is now your new support. So we would expect this to turn into new support. And if we do break below that, we have the 50% retracement mark. In all cases, there's much more in terms of levels to the downside than we have levels to the upside. To draw levels to the upside now, we have to take much smaller swings like this current one, which doesn't give us all that attractive targets. It just gives us shorter term trades. The bigger term picture very clearly right now seems to be that we've hit the golden ratio. Let's pivot to the Qs. If we come into the Qs are very similar here, except we can remove our previous lines. And now let's draw in our new Fibonacci level. So we're simply going to take the swing high to low, and you'll see in the Qs we've surpassed it. Golden ratio 687.32 right now feels more like new support that we expect. So between the S&P 500 and the Qs feel like they have a little bit more buying strength in them. Finally, we bring this to the Dow. The Dow, I've already made these levels ahead, and you see that we tagged the golden ratio, and right now we're chopping inside of the golden ratio and that 1272. We already made that 1618 to 1272 move that we are still looking for inside of the S&P, but in the Dow, we've already made that earlier in March and April. Now we're looking for that to happen one more time. Now the question is, how do you take advantage of all of this information? What would be the ranking? So in order of strength, at the very top, I would put the Qs, then we would have SPY, and at the bottom here, we have DIA. Given that the markets are still currently in this stage of acceleration, we're looking for more long side entries. So Qs and SPY make a lot more sense where we see that strength. If you were looking to fade price, it would be these bottom two, SPY and DIA. And how do you do both? Well, I think if you were to simply come in and take a look at what the Volatility Box models told you today, you could find some simple clues. Let's start with the Qs, our strongest one. Qs, remember, we said our bias is to the bullish side. So far, it's the strongest. Take a look at what the Qs did today in terms of price activity. We started the morning off with a whole lot of strength. So short side setup was the one that triggered. We're looking for long side setups, which then triggered in the 7 to 8 a.m. Pacific hour. We had price action fall inside of our Volatility Box models. We saw buyers gather steam, and that led to a really nice reversal, which was really the trade for the rest of the day. Another long side entry towards the tail end of the day, right before the final hour, and one more time we see that shape place. Finally, into the very last few minutes of the hour, we had one more long side breach inside of the Qs, and this was really in the final few minutes. So if you take a look, Qs, very clearly we saw our long-term bias, and the long trade setup that took place today inside of the Qs was in that 7 to 8 a.m. Pacific hour. Next up, we had on our ranking, SPY. So let's move into SPY next. We repeat the same exact process inside of SPY. Now, unlike the Qs in SPY in the morning, the setup that we also had a long side breach in that first 6 to 7 hour. Now, we're not looking for new trades in this hour. It's simply just proof that, hey, the models are working right now. We know we can use the aggressive models for the rest of the day. So now fast forward, next hour, you can see price falls into our sign lines, bounces from there. But is this bounce as good of a bounce as we had in the Qs? It's a nice bounce, but not as strong as what we saw where we had strength in the markets. And just like the Qs, we had the bounce into the tail end of that 11 to 12 p.m. Pacific hour before the markets rallied, along with the final few minutes when the markets closed. Now, finally, we have the Dow Jones. Now, Dow, if we come in, take a look, Dow we had morning short side setup, and if we take a look at where we had the long side setup, if you remember in the S&P and the Qs, 7 to 8 a.m. we had volatility. Take a look at what happened in the Dow here. Absolutely nothing. We can't see a whole lot of that same volatility come in. Instead, price is just chopping around. The only long side setup that overlaps with the SPY and Q is the one in that tail end before the final hour of the market, so 11 to 12 p.m. And you'll see that this did hit T1, but it wasn't as nice of a trade as where we actually had strength in the markets, which again, SPY and QQQ. So I hope you found this video helpful. We started with a big picture view here of looking at SPY, QQQ, and DIA in terms of their Fibonacci levels. Where are they on this broader roadmap? We then use that to very quickly and clearly make rankings 1, 2, and 3. Using that, we had the Qs, then we had SPY, then we had Dow Jones, and we used that bias to come into our intraday volatility with, in this case, our stock volatility box models. For all of our futures members, repeat the same thing with the futures models. It's the same exact concept. Take care. If you have any questions, feel free to send us an email. Else, I'll see you in the next update.